Hello, and thank you for taking the time to watch another brief video brought to you by myself, Dan Scharlach, and Innovative Wealth Partners. Today, I want to spend all of our time discussing the idea of a required minimum distribution. This may not impact most of you, but for a select few who are just turning or approaching the age of 70 and a half, it might be very relevant. The required minimum distribution is the amount of money that you need to take out of your 401k, your IRA, your traditional IRA qualified money baskets in order to comply with the government rules and regulations. This is a process for which what you basically need to do is look at all of your IRA values. Okay, so what you do is you take all your IRA values, you add them up, you total that up based upon the end of last calendar year. Okay, so if we were going to calculate 2017's RMD in 2018, you would go to the end of 2017, 12/30, 12/31, whatever the last market day of the year was. You would take the value, the actual value of the account. If you have multiple accounts, you would add them all up and use that value to calculate what your RMD is going to be. It's a government calculation or formula based upon your age and interest rates that are out there. You can find many calculators out online, or we can help you with that if you want us to. That part is fairly easy. The logistics of the values that you need to plug into it are sometimes a little bit confusing. We tend to get a lot of questions on this, so that's why we're doing a video. Again, you take all your values, all your IRA values for that person turning 70 and a half. Okay, IRAs are individual accounts, so you do not combine yours with your spouse's. It is just yours. And you add all of those values up. So if you have a CD, if you have an IRA that's in mutual funds, if you have any other IRAs or any other values, you're going to take and add all those up, total them, and then that is what you utilize for your RMD calculation. If you would happen to have an annuity and you would have multiple values contained in that annuity, you want to use the accumulation value. You do not want to use an income value. This is how the RMD works. We don't want to spend a lot of time in this video going over what happens if you calculate it wrong, but it can be a costly mistake, so we encourage people not to do this. However, if you do need some help with calculating your own RMD, we are a resource that you could utilize for that, or you could check with your current advisor and or administrator and make sure that they are able to help you with that. You can take it out over the course of the year. The government does not tell us yet how we do that, so you can take it monthly or quarterly or however your heart desires. If you have any questions about this, feel free to reach out to us. If not, we appreciate you taking the time to watch the video. Hopefully you found it educational. Thanks. Talk to you soon. Quick follow-up to the stats mentioned in this video. We forgot to address the differences and the dynamics for 401ks from a qualified perspective, along with the IRAs that we mentioned several times in this video. 401ks are a separate animal. Okay, these need to be treated uniquely and differently than an IRA, in our opinion and in our interpretation of the IRS code. You need to isolate these out. If you have multiple 401ks, they each need isolated out. You need to take your RMD distinctly out of each 401k separately. So if you would be someone who has a couple of IRAs over here on the personal side and multiple 401ks over here on the 401k side, each 401k requires a separate RMD. The IRAs can be lumped into one if you would like. The 401ks, it's a different entity. It's a different type of an account, so it just functions a little bit different. And then the last thing that we wanted to mention in this video is Roth IRAs and Roth 401ks. Roth accounts do not need an RMD. Okay. So Roth accounts do not require a required minimum distribution, primarily due to the fact that they are not taxable, which a large percentage of the reason why the federal government does require required minimum distributions is due to getting some tax revenue. So again, just to recap, 401ks are separate. They need treated in isolation with their RMDs. They are separate from IRAs. Qualified accounts do act the same. Roth IRAs do not. They are a separate entity. Thanks again.